Last month, US30 closed bullish. It did close off around the weekly supply zone, so our bias for this month is bearish. However, we are expecting price to push further into the immediate supply zone and extended supply zone around the 34207.8 to 33342.9 zone before we can see some reaction or a sharp rejection within that zone for price to start trading lower all the way to 31016.5 price level. That will be a confluence of the diagonal supply and our horizontal supply. Away from the weekly time frame, on the daily, we can see an immediate supply zone. That is exactly where last month candle closed at, which is this bullish candle. So we are seeing some reaction around the supply zone. But there's strong expectation that we are going to see an extended move whereby price is likely to break above 33106 and push all the way to 34208.9 price level before we can see some reaction within this area for price to start trading lower. Away from the daily time frame, on the H4, price has been trading in a steady bullish trend. This is the area of concern from the daily time frame, which is exactly a supply zone where price is currently reacting at. However, with our expectation of an extended push to the upside, a break above the immediate high at 32967.4 price level will expose price higher towards the extended level from the daily time frame, whereby we will see some reaction around that point for price to start trading lower. So picking from the 4-hour time frame, there is an early opportunity because we are basically looking at a break above the immediate structure for price to continue towards the extended target before the reaction. So moving back to the daily time frame, the extended target point is 34208.9 price level. So basically our bias for US30 is a push to the upside after a break of 33106.9 price level before we can see some reaction or rejection around the 34208.9 price level for the bears to kick in to the markets. So this is basically our bias for the month of August. Do have a wonderful trading month and trade safe. Last month, pound Australian dollar closed bearish, so there's an expectation for price to continue bearish this month. On the weekly time frame, we can see that currently price is trading within a sideways range, which is a distributive phase following the markdown we had over the past week. Overall trend is bearish on the weekly time frame all the way from the 30th of April 2020. Away from the weekly time frame, on the daily time frame, the supply still holds as we saw a series of rejection within the supply zone. There was a retest of that supply where price rejected and we saw some significant drop in price. Currently, there has been a rejection around the demand zone formed of this lower boundary of this range. In expectation of the sell continuation, we are expecting price to pull back into the supply zone for us to see some reaction as previously seen here before the bearish continuation will take place all the way ultimately to 1.6944 price level. On the 4-hour time frame, we can see that the immediate bearish structure has been taken out. So price is currently trading bullish. There is an immediate high which we expect price to react around that high before probably continuing into the supply zone for us to see an ultimate reaction in line with our bias, which is bearish. So our overall bias on pound Australian dollar is bearish following the close of last week candle and what price is currently doing on the weekly time frame, which is price is currently trading in our distributive phase. So there's an expectation for price to react within the supply and trade lower giving us a new prospective low around the 1.6943 price level. Also on Brent crude oil, last month closed bearish with a longer wick to the downside. So there's an expectation for price to fill that wick and probably continue trading lower. We are not just going to jump into the sell immediately. We will wait for some confirmation before joining the sell. So currently, price is also trading in somewhat of a sideways zone, because we saw a rejection previously. There's a buy candle, another buy candle breaking the previous buy high. Then currently this wick is starting off with a bearish candle, though it has not closed yet, but we are still positive about the bearish momentum for the month. So a break and close below 1.01.80 price level is when we will now validate and have more confidence to jump in for the sells, with target at the nearest demand zone, which is 87.13 price level. Away from the weekly time frame, on the daily, price is trading in a sideways range, which is obviously a distributive phase following this previous markdown. And we can see that price has been maintaining the bearish structure with the presence of high, lower low, lower high, lower low, and a lower high. The most recent lower high formed with a rejection candle. This apparently is the last candle of the previous month. So the first day of August closed bearish, confirming this rejection and giving us signal for more bears to jump into the market. So basically, like we said earlier, we're going to wait for price to take out 100.80 price level before we can validate and jump in with target at 87.13 price level, which is our next immediate significant demand zone here on the daily time frame. On the 4 hours, we can see the range has been expounded here on the 4-hour time frame. So this is the range. So on the 4-hour time frame, there's an immediate support level at 102.09 price level. So obviously, if you are going to be taking the sells from the H4, you have earlier entries, because we are looking at a break of the immediate support before we can jump in for the sell continuation. So overall bias is bearish on Brent crude oil, but we have to wait for the low of the immediate support to be taken out, which is 102.09 price level. Then we'll be targeting the 21618 FIP level here on the 4-hour time frame, which is at 87.29 price level. It obviously confirms our initial price level from the daily time frame, which is 87.13. So this is like a confluence, both the FIP extension level and the immediate demand level. So our overall bias on Brent crude oil remains bearish for the month of August.